Welcome to the channel. I am James, and today we're looking at the Roblox Corporation, ticker symbol Rblx. They have just released their earnings for the first quarter of 2022, and we are going through these numbers right now. Then we're going to be putting these updated numbers in my model, my discounted free cash flow model, my Buffett-Graham intrinsic value model, to see if this stock is a buy based on these numbers. So quickly, let's talk about the stock. It's currently at, well, it's now at $22.51 a share. It's down 3% in the after hours and down 5% on the day. So the market isn't really reacting too well to the earnings. But you can see if we go to the stock over the last year, it was at highs of around about, God, what was that? I can't even get my mouse on it. $134 a share at its all-time high. And since then, it has dropped almost 82% to its low of $23. If we just bring this out even further, you can see this is the lowest it's ever been. Is this the time to buy? Well, that is the question I'm going to answer right now. So let's have a look at the earnings. Let's zoom in a little bit here as well. So we'll talk about the highlights straight away. Revenue increased over 39% to $137 million. So that is pretty good. And net cash provided by operating activities, 156 million, with free cash flow of 104 million. This is going to be pretty important when we talk about the free cash flow, discounted free cash flow. Bookings decreased 3% to 631 million. Active daily users were 54 million, up 28% year over year. Hours engaged 11.8 billion. This is America. A lot of companies keep definitely good tabs on. Up 22%. Average bookings per DAU, ABPDAU, was $11.67. We'll be talking about these estimates in towards the end, but let's get straight into the financials. So before that, can you please give a like on the video? It really helped me out. Helped me out in the last video, guys. You got that out to so many people, so I just want to say thank you to that. And subscribe if you're not already, because I'm going to be doing this very often. So revenue of Roblox here, we have 2022 on the side, on the left-hand side. This is the 3 months ended, and then we have the previous equivalent quarter in 2021. So we want to see good growth here. And yes, as we know, revenue is 537 million for the quarter. That is up from 386. If we just go to Yahoo Finance, this is the revenue for the year. You can see that the revenue for this quarter is actually higher than it was for the entire year, 2019 and 2018. Almost $1 billion in 2020 and just shy of $2 billion in 2021. So with this updated number, what does that mean? Well, that gives us 2.069 billion. That is very nice indeed. So revenue is all about up its highest it's ever been on the year. So that is excellent. Let's have a look at the next thing. We want to be looking at the profit. Is this company profitable? And the answer is no. We've got the net loss attributable to common stockholders, minus 160 million compared to minus 134 in the previous year. So how do we get this? Well, it's revenue minus all of these expenses. Cost of revenue is quite high. Developer exchange fees, that has increased. This increased massively. That has increased. Infrastructure, trust and safety, that is a big spend. R&D basically doubled, 96 to 177. General admin's down, that's always good to see. And the marketing is up. So yes, the total cost and expenses, 688 million compared to 552. The main bulk of this on R&D. So if they can use this R&D to generate more revenue in the future, then it's not a bad thing. But right now, this is a loss company. 134 million compared to 160 on the quarter. Now, if we just go back to Yahoo Finance, if I get these numbers eventually right, you can see it's always losing money, increasing 88 million, 70, 251, 491, and now it is at minus 517 million dollars. So that is obviously increasing again. Still not a profitable company. Next, we're going to be looking at shares outstanding. Why do we care about shares outstanding? Well, if there's 10 shares in a company, you own 1, and then you own 10% of the company. If the company buys back 5 shares, you would then own 20%. If they issue more shares, you would own less. And Roblox are issuing more shares, 588 million shares compared to this time last year, 291. Now, as I always say, let's go to this graph here. This time last year, the share price was around about $80 a share. They were issuing more shares at this point. If they were issuing shares here, they make good money because the stock price is at an all-time low. So it's actually worked out quite nicely for them. You can see the shares are down 9% now, $20 a share. The stock is continuing to drop. People are not too happy with it. Now we want to look at the free cash flow. We got the free cash flow at the top, but how do we get it? Cash from operating activities minus capital expenditures. And we've got cash from operating activities up here. Sorry, down here. Net cash. Sorry, where's it gone? I've lost it here. Cash flow from operating activities minus capital expenditures, and we have it down at the bottom. Sorry, net cash provided by operating activities, 156 million compared to 164. So that is down. What does that mean for free cash flow? Well, if we go to the where's it gone? Where's it gone? The purchase of property and equipment, which is the capital expenditures. I hate it when they change their things around. They always do this to me. Well, I do have the number on the left-hand side here. This is why I do this before. CapEx was 86 million. And as we said, the net cash provided by was 156 million. So what does that mean in total for free cash flow on the year? 485 million. And if we go to Yahoo Finance and compare the previous cash flows, you can see that the cash flow is actually down from the previous year, which is not ideal, but overall it is up. So let me just put these numbers in here, and then we can go to our discounted free cash flow model and have a look at the value of the stock. So let's go to that right now. Here we have it here. We've calculated the future free cash flows. And what does that mean in terms of today's value of the company based on discounted free cash flow models? Well, let's just have a look right now. Based on discounted free cash flow models, if they increase their free cash flow, this is actually a buy based on the discounted free cash flow model. This is, see that they're still increasing free cash flow, but if we look at the numbers here, the sheet doesn't like it at all because of the negative free cash to net flow income. It doesn't really like the stock. In fact, the sheet breaks if I put these averages in, but we're assuming here that they do continue to grow their free cash flow. Discounted free cash flow does say the stock is a buy. Buffer Graham intrinsic value, as you're about to see here, does not work at all. Minus earnings per share. Interestingly, minus growth rate. Analysts are expecting the stock to go down 23% over the next 5 years. So you can see it's actually giving it a positive number here, 2 minuses. So do not look at this value here. This fair value is incorrect. It is basically saying do not buy it. That is what Buffett and Benjamin Graham are saying right now. But discounted free cash flow surprisingly likes the stock. It did like the stock in the past when it was a bit higher. Let's see what the stock's doing. Down 10% now to $20 a share. So basically, from its all-time high right now, it's down over 82% because this is with the share price being $23 a share. This stock is continuing to drop. Looks a bit undervalued at the minute though, surprisingly. So the model does say it's a buy. Right guys, thanks for watching. Sorry that was a bit rambly in the middle there. But give a like on the video anyway, it helps me out. And I've got a Coinbase video coming out as soon as they release their earnings. So I'll catch you guys next time.